Monday morning, folks, and welcome to a brand new episode of the FINMET Mondays podcast. Last week, we spoke about how both metals, gold and silver, are establishing a floor in their price action. And we saw an outcome of that in this past week, where using this as a floor for gold to be 2400 and for silver to be 26, the metals were really able to rally this week as fears of a recession kind of ebbed. Sunil, what did you make of these moves in the market, especially gold breaking its previous all-time record high and crossing above 2500 for the very first time?
I think it's been coming for some time. Over the last few months, we've seen this correlation of a bullish gold trend whenever the probability of a Fed funds rate cut is confirmed. We've seen this bullish trend. And the ultimate confirmation came last week with the data. And I think people felt that now finally we have enough data to show that the rates are going to be cut in September. And therefore, that gave the push to gold to break the previous levels going higher. So I think that's happening because there is new money coming in into the gold markets. People are maybe taking profits from the bond market, people taking profits from the equity markets because they're not quite sure what's going to happen after the September rate cut and also getting into the elections in the US. So even if a small amount of money comes out of these two asset groups, equities and bonds, that's enough to really push gold much higher. So I do feel that that momentum has come, and this recent movement we saw on Friday is going to see follow through buying maybe in the coming weeks.
There definitely is a lot of buying momentum on the technical side as well. Let's quickly look into the charts and see how that will kind of play itself out in this coming week. There was ABCD sort of a structure, this triangular structure that has been forming in the daily charts of gold. One of the key aspects was how prices have broken above this previous resistance around 2480, obviously, and has now created a new high about 2500. If we extrapolate how the prices have moved in this recent past in this ABCD kind of a structure, you will see that there was about a 5.63% increase from a low initially to this high that was formed here. This same 5.6%, if we extrapolate it going forward, we arrive at a near-term target of about 2600. In the more near term, we have another resistance around 2550. There's something very similar that we noticed in the silver markets. You see a similar symmetrical triangular structure. And one of the key aspects to note is that in the silver markets, the RSIs are still very much just trading above the 50 level, which means there's huge amount of strength the markets can really pick up after the recent string of data that has come in. So in terms of the technical levels, you would definitely see an ascent towards 29.8, followed by a break above this 29.8 to move on to the 31.2 levels as well. This would be the trajectory. In terms of the economic indicators, the key events that we have, A is the release of the Fed minutes on Wednesday. This basically will tell us about what were the details of the conversations between the Fed officials regarding the interest rate cut in September. This will be key to watch. And specifically, Fed Chair Powell will also be speaking at a symposium on Thursday. And he's widely expected to give some sort of an affirmation on if there is a rate cut in September. One of the key things I just want to also point out is a 25 basis point rate cut has already been priced in gold and silver. It's not like you're going to expect another leg up post the announcement. In anticipation of this announcement already, there's already pricing action that's going to be taken. What might influence the markets to extend the bullish momentum even more is if there's a surprise announcement from Fed Chair Powell where he says we may be even wanting to extend to 50 basis points. I think that would really shake the markets and that would really extend and give another leg to the markets. Otherwise, I wouldn't think this will severely affect the markets this week. And lastly, talking about the extent of the rate cuts itself, as of today, we stand at a 75% chance of a 25 basis point rate cut. Like I said, this will not severely affect the markets. But if you talk about a 50 basis point rate cut, which has a 25% probability, this will kind of shake the markets much more vigorously. You're going to see much more volatile action come out as a result of that. So, Yasin, that's broadly a recap of how the markets are going to play out. Let's see the price action for this week, and let's meet next Monday. Thank you so much.